Welcome to Future Lens, which is powered by ATH Insights. In a world which is driven by constant change, we bring to you innovators and legacy leaders who will help you to navigate this and define it too. From boardrooms to breakthrough ideas, from trailblazing entrepreneurs to founders who have made a big difference, Future Lens is all about innovation, vision, and defining legacies. Join us today as we sit down with legacy leaders and founders to bring the very essence of Future Lens to you. We are joined in this session with Mr. Keki Mistry, who has been the very pillars of HDFC Bank, and we bring that legacy to you in this conversation. Today we have Mr. Keki Mistry with us, sitting in the hot seat and talking to us on what are going to be the future innovations in housing finance. So let's talk to you on how housing sector's role in India's economic growth has now grown up, or what is different now.
Well, I think housing and infrastructure, both taken together, has such huge, enormous pillars to economic growth. And the main reason is the fact that the number of jobs that get created in the housing and infrastructure sector are humongous. So if you look at the housing sector, for example, it's not just the masons and carpenters and plumbers and engineers, but it also includes a whole range of other industries which are dependent on the housing sector for their survival. So, for example, you look at sectors like cement, steel, paint, power, and multiple other sectors that make nuts and bolts and, things like that. So housing is a huge employment generator, apart from the fact that it's obviously a big social need, and the government has been very focused on providing some kind of benefit, some kind of incentive for the housing sector.
It has been a major contributor for the GDP's overall growth, right? So when you talk about job creation now, which has been done by this sector. Let's talk about tariff now. The tariff is all the news now. We hear a new tariff coming out every time. Do you think that India is less vulnerable to tariff threats compared to economics like
All right, so let me tell you. I
Yeah.
think when the tariffs were first announced, three months ago, there was so much of panic. Everyone was worried tariffs will do this, tariffs will do that. But I think if you sit back and analyze where India stands versus others, you will see that the impact on India is not going, the direct impact, to make up direct and indirect, the direct impact on India is not going to be that huge. So if you look at exports, so exports are typically about 21 to 22% of our GDP. And within exports, if you were to look at the US, for example, our exports to the US are about 17% of our total exports. So if you really measure that in terms of direct impact on GDP, to my mind, it will be not more than 30, 35, 40 basis points at best. Now, that will be partly offset by the fact that if the rest of the world goes a little slow, oil prices could come down. Oil prices coming down is a big benefit for India because, as you know, we are a very large importer of oil. So one of the biggest sectors which impacts our growth is oil. When oil prices go up, it's a huge cost to us. When oil prices come down, it's a huge benefit to us. So because of tariffs, if there is a general slowdown globally and oil prices were to come down, that could offset that 30, 40 basis points impact that tariffs would directly have. Now we have to look at the indirect impact on tariffs, and that is something which is difficult to measure. So if job creation, take for example the IT sector, if theoretically there is some impact on the IT sector because of tariffs, and at this moment I don't think tariffs will impact the IT sector directly, but if it were to, then it has some effect in terms of job creation and stuff like that. But I don't think we should worry too much about that at this point of time, because that is something which is not really determinable. But direct impact on tariffs, relatively less. And we are positioned much better compared to countries like China and Bangladesh and Vietnam and countries like that, which are competing with India for exports.
So we should stop listening to Mr. Trump's directives.
We should be. It's obviously all this is relevant and all this is important, but I don't think we should make it sound as if it is going to be a massive blow to India. I don't think it's going to be a massive blow to India.
So I would say the biggest takeaway is that we analyze what is coming out, wait, watch, and then...
And also you must understand that the Indian economy is largely based on consumption, domestic consumption.
Yes.
Our economy is driven by the fact that people. You have a lot of people, young people, and people are earning money as they get jobs. They spend money. As they spend money, consumption increases in the economy. When consumption increases, it automatically creates demand for goods and services. And if there is demand for goods and services, then companies need to manufacture more, need to produce more, which means they need to set up more factories, they need to set up more facilities, which therefore means they will hire more people, more jobs will get generated, more income will come, and therefore income will get spent. So as long as our domestic economy remains strong, I don't think they need to worry too much about tariffs.
A classic case of a demand and supply, right? That's what India is now at the generation, right?
Absolutely correct. So long as we can continue creating demand, suppliers will automatically produce more, which therefore means that they will hire more people, more jobs will get.
Yes. So we spoke about tariff. We found that India seems to be somewhat insulated. Relatively insulated, yes. How viable do you think it would be there in coming years? Like, is it still insulated, something around 2-3 years down the lane? Because
no, I think, I don't think these tariffs can be a perpetual kind of a thing. For some point of time, I'm sure there's going to be some kind of rollback on tariffs. But let's wait and see. But so long as we can continue generating jobs in India. To me, I think the most important thing for India is to make sure that we are creating enough jobs for all the young people who are passing out from schools and colleges and business schools every year. Because as I said earlier, if we create jobs, then automatically people will earn income, they will want to spend money. If they spend money, demand increases, and therefore manufacturers have to produce more, which means more jobs keep getting created and consumption keeps increasing. So domestic consumption is about 60% of our GDP.
So coming on to the vital part is that any kind of consumption to increase, any kind of production to increase would mean that there has to be a government-led initiative. It's not only the private player who has to come, even he has to be helped by the government always. So what do you think about the government policies for housing? Is it something which is a win-win? And
I think the government has done, this government in particular, has done a tremendous lot for the housing sector. If you take the last 10 or 11 years, there have been so many initiatives that the government has taken to give a further boost to the housing sector. Obviously, because one, it's an economic need, it's a social need for the country, and more importantly, as I said, it also creates so many jobs in ancillary industries. So the government's been very focused on housing. For multiple years, we've seen tax benefits associated with taking a housing loan. So the interest you pay on a housing loan is tax deductible. Even the principal repayment of a housing loan is tax deductible, all up to certain limits. Capital gains exemption is there on housing and so many other fiscal benefits. And if you see the interest benefit, the original amount was only 5,000 rupees. Then it became 15,000, 30,000, 50,000, 150,000. 200,000. So perpetually over a period of time, the government's been increasing that limit, which makes housing more affordable. But I think one of the most important initiatives that the government took was on the credit-linked subsidy scheme that the government had, which was part of the PMAY program. And that helped provide housing to a whole lot of people who otherwise would never have been able to buy a house. Typically middle income, lower middle income people benefited from that scheme.
So let's just circle around to the part also. So does this infrastructure development which has been provided by the government or through schemes, does it go even to the Tier 2, Tier 3 cities? Because now we have many housing development companies who are concentrating on that sector. Because many of the major cities have become unaffordable in a sense, for the arm janta, as we call them.
So, if you go back to 20 years ago and you go to a small town, you see, and today you go to that same town, you see that the level of development that has happened, whether it's in infrastructure, whether it is in terms of the kind of houses that are there, whether it's where you're looking at the lifestyle of people living over there has been a sea change. And that change has been brought about because of the policy of inclusion, where you're having the smaller towns, the Tier 2 towns and the Tier 3 towns, as you said, also getting the focus, also getting the attention of the government. So housing per se, in my opinion, is literally an insatiable demand. Because we have a young population. 2/3 of our population is below 35 years of age. And the average age of a first-time home buyer in India is almost 37 or 38 years. So it's not a 20 or a 25-year-old person who goes to buy a house. It's someone who's in his mid to late 30s. So, and with so many of Indians today being below 35 years of age, what it really means is that Most people today are not even thought of, not even contemplated buying a house. But over the next 1, 3, 5, 10, 15, 20 years, all these younger people will get to an age where they will necessarily want to buy a house. So in my view, there will be a structural increase in the demand for housing and therefore housing finance in the coming years. And it's not going to come only from the tier 1 cities. It's going to come from even the smallest of small towns. And the mushrooming of all these large housing finance, all these not necessarily large, but even small housing finance companies across the country, particularly in the affordable housing space, is a huge, I think, benefit that these smaller towns are getting in terms of availability of finance for buying a house. And we must give credit to the National Housing Bank, which has done so much in terms of encouraging creation of these housing units.
So you spoke about the bargaining 35-year-olds who would come up, right? My next question was all on it, the Gen Zs. So they have a very different take on, like there was the boomers, as they call, who thought, who came to Taiwan cities and thought, let's first earn money. And then they went into getting houses on, later on. And then there was the millennials who are now all into housing.
So let me tell you one.
Yeah.
If you go back 30 years,
yes,
or even 35 years for that matter, even at that time, the then younger generation would say, why do we need to buy a house? Let's gain a rented house. But gradually you find, and we found this, and you will find this over the years, that when people get to a certain age, when they get to the late 30s, 40s, mid 40s, they need to buy a house because a house gives them that mental stability, that mental comfort, that they own a real asset. And whenever they retire, there have been so many instances that we saw where people bought an apartment, let's say in the city of Mumbai, where property prices obviously are very high. And then after retirement, they would sell that house, sell that apartment, and buy an apartment in a smaller place, like wherever, in Nasir, Nagpur, wherever. So, and the money that they would earn or they would get from selling that property in Mumbai would go a long way in giving them that lump sum or that sum of money, which they could then invest and earn interest on that income during their retired life. So housing gives you that mental comfort. It gives you that emotional comfort, and it also gives you that financial support at the time when you need it. So I have no doubt in my mind that even the younger generation today, which may be, which will say, why invest buy more,
they ask why a lot.
30s and 40s.
Yes.
At some point of time in life, as things stabilize and they become older, they will need to buy a house.
Okay, so roti kapda makan resonates still now. That's what you're saying.
I have no doubt in my mind that buying a house is so much better than just renting a house forever.
I like the concept in which you put across that, having housing in a tier 1 comes across almost as a retirement planning for people,
Exactly.
Exactly. That's a very beautiful concept that I brought to place. Let's talk about housing finance now in the future. You spoke about how the demand will come. Let's talk about the players who have come into place. There are many players who are now come out to cater to different needs and different categories of buyers. Do you foresee any further consolidation in this space?
See, each player or most players are operating from niche markets. So if you're operating from a smaller town, you're operating from a certain tier 2 city or a tier 3 city, you'll be able to grow by yourself. You don't need to necessarily consolidate or have mergers and stuff like that. Any merger, any kind of merger that you do must be done only if there is a synergy attached to it. If you are a housing finance company operating, let's say, in Maharashtra, and you want to do something in, let's say, whatever, they take any example in Karnataka, then you look at a housing finance company in Karnataka, see if there is a synergy, and if there is a synergy, you look at a merger. But I think there is enough scope for the housing finance companies to operate on a standalone basis without necessarily looking at mergers.
As essential, no mergers and partnerships would be. How about NPAs? Like in a smaller player, for them to handle NPAs would be a.
You talk of NPAs. NPAs is not such a problem in the housing sector. In HDFC, for example, with over 45 years of business, our total loan losses, money we could not recover from individual customers, was only, and we had to write off, was only 0.04% of what we had dispersed cumulatively, only 4 basis points. So the average, the mentality of the average Indian, and with due respect, there is tremendous amount of honesty in people. And if you've given loans to the right kind of person, you will not really have serious long-term issues. Yes, NPAs can come because people fall into temporary financial difficulty, but you'll find that over a period of time, even though they may have been in NPA at some point of time, over time they come back and settle their loans or pay back their loans. So the Indians by nature today are, even in the past, more so in the past, were very debt averse. So even though you may take a loan, you'll find that most people come back before time and prepay their loans. They don't wait for the full duration of the loan. You take a 15-year loan, you'll find that many people after 5 years, 7 years come back and fully prepay the loan.
So,
And it's not because people are prepaying because interest rates are high or interest rates are low. It's just that they don't want that debt on their mind. They just want to get rid of that liability.
so the mental makeup is all towards,
Mental
saving.
makeup is, at least for a housing loan,
Yes.
pay it off as early as possible.
Well, the RBI governor just commented last year saying that, CASA is now down and that way. So housing can be thought as something which they are saving for, right? We spoke about housing finance. We spoke about your views on tariffs. Let's talk about your leadership thoughts. You have led HDFC through a massive transformation. We identify HDFC, last 4 decades you've been part of it, What leadership principles, strategic decisions were pivotal during the journey?
All right, so let me go back to the time when I joined HDFC in 1981. In those days in the 80s, automation did not exist with companies. There was nothing like today. You have ITs, your systems and your automation, stuff like that. In those days in the 80s, everything was manual. You did manual ledgers, you wrote manual entries and so on and so forth. But even then in 1981, we had automation. Our systems were partly, not entirely, but partly automated. Our general ledger was automated. So we embraced technology at a very young stage in life. And I think that, and we kept innovating, we kept changing, we kept anticipating changes in the economy, changes that could have some impact on our business. And you have to change when you think things are going to, the world is progressing, rather than be forced to adopt a change when somebody else has already innovated it. So answer is innovation. You have to be always constantly innovating, whether it's in terms of products, whether it's in terms of the way you provide your service, whether it's in terms of your customer engagement or whatever. You need to keep innovating. Our business was giving housing loans. Now, obviously, to give housing loans, you need money. Where will you lend if you don't have money on side?
Yes.
So when we started with a capital of 10 crores, which got used up very early. And then came the biggest challenge, which was to go and get money to fund the lending business. And that's the time when we got a loan from LIC, a 10 crore rupee loan from LIC, which was really a lifesaver for us. And we also got a small 4 million, relatively small at this time, a $4 million loan from IFC, which actually turned out to be the costliest loan we ever got.
Okay.
Because of the exchange rate changes over time. When we got in, and that number, that exchange rate is still etched in memory. When we got the loan, the exchange rate was 12.56064 for 100 rupees, which is 7 rupees 96 paisa. And when we paid back the loan over a period of 7 odd years, the exchange rate at the time of the last payment was almost 17 rupees to a dollar. And in those days, there were no fancy instruments that you could use to hedge your foreign currency risk. What I'm saying is, you have to do certain things in life which at that point of time will look costly, but it creates that base, it creates that confidence in others to provide you with funding. I'll give you an example of let's say 1992, 1993. Now, the Indian economy was going through a very difficult period. We had to let go to come out of
it just opened up markets.
We opened up the market. So that we took advantage of that, and we looked at how we could expand into other areas of financing. So we were always a housing finance company.
Yes.
But we were well known. We have reputation. We had a very good reputation in India. Brand was well known in the country. So we said, why not use that brand and look at setting up a bank? And banking sector was opened up. And then we applied for a banking license, and we got a bank, and we started a bank. Then came life insurance in 2000, general insurance immediately thereafter, asset management immediately thereafter. Then we expanded into education finance. So we looked at the different synergies that were available in our pure housing finance business and saw that we would sort of get into those businesses. So we took advantage of that. The other thing I would say is funding, deposits. in pre-1992, our funding was all wholesale. Bank loans, loans from institutions, overseas funding and stuff like that. And then in 92, 93, 94, inflation was high in India, interest rates were very high. And if we were borrowing wholesale money, the cost of that money would have been extremely high to us. So if you were to borrow money at 15% from a bank, and we would want to say, let's say a 2% or 1.8% spread, and we had to lend money out at 16.8 or 17%, who could borrow money?
Yes.
I mean, housing has to be, the rate has to be affordable. So that was a time when we innovated and sought what is it, that little extra that we could do to get funding at a lower cost. And we said that the best way to do it is through deposits. We were allowed to take public deposits. In those days, many companies were accepting deposits. But it would take you 2 months, sometimes 3 months to get your deposit receipt. A small chit of paper saying that the company has taken a deposit from you. So we said, why don't we innovate and do something where we can provide across-the-counter deposit receipts? And we did that. And we were able to provide a deposit receipt within 2 minutes or 3 minutes or whatever it was. So in those days, in the 90s,
even today we find it hard.
And that then became an instant success. So thereafter, we really never had any challenge in terms of funding. So many things like that over time. To 2001, banks started getting into housing finance. The banks have huge reach. State Bank of India, massive number of branches. ICICI, massive number of branches. We had to also find ways of, enhancing our distribution. And that's the time when we tied up with HDFC Bank, where HDFC Bank became a distributor of loans for us. So they would source the loan. We would do the credit appraisal, the legal checks, the technical checks, which were really our strength. And then we would generate the loan, we would disperse the loan, and then the bank could have a right to buy back a certain percentage of those loans. We also set up a 100% owned subsidiary called HDFC Sales. And the objective of HDFC Sales was really the distribution arm of HDFC. So number of innovations like that over time. Some of these done because of the times were changing. Some of these were just automatic progressions from what we were doing.
So you've been, I could count 7 innovations which have changed. Like I could find that, you've been one of the housing players who have gone through a bank rather than the other way, reverse engineering around. Yeah. So let's talk about the future. You've told us the future is bright. That
for housing?
For housing.
Oh, absolutely. Future for the Indian economy is very bright. Extremely bright.
Yes.
We have a very strong government which is focused on growth.
Yes.
We have the best regulators that you can find, whether it is in terms of RBI, whether it's in terms of SEBI, whether it's in terms of IRDA, the best of regulators. The financial system has tremendous amount of discipline. The quality of loans, the non-performing loans in the banking system is at its lowest that I can remember in decades. So I think we are very well placed for, further continuous growth in the economy. The only thing we need to be, mindful of is the fact that we need to continue creating jobs for all the people who are passing out.
The demand shouldn't dry up. It should be there. Demand and supply should be there, right? You have spoken about the housing finance. What was your advice? Okay, how about as such all these young entrepreneurs who have come, the startups? There's a huge economy which is on a whole going, which is ultimately contributing to the economy. Yeah. So your words of advice to them.
Oh, there are many things I can talk about if I was to give advice to a young entrepreneur, but I would say 4 or 5 broad things. I think the first thing I would say is look long term. Don't look at short term. Don't look at what you'll do next quarter or the quarter after. You have your sights 5 years from now or 10 years from now. Aim for that 5 years or 10 years. Don't look at next quarter or quarter after that. Take, for example, in our own case, when we started the life insurance business. Life insurance is a very long-term business. A lot of our investors would come and say that we are using our capital to invest capital into HDFC Life, and thereby our net interest margin would come down because the money which we would have put as a capital into the insurance company would otherwise have earned income for us. But we said long term, it'll be a huge benefit, and it has turned out to be a massive benefit for us. Today, the insurance company is a very integral and important part of the HDFC and now of HDFC. So you have, whatever you do, aim long term. Don't look at short term. Don't have short term goals, have long term goals. That's advice number 1. Advice number 2, I would say, is to create the right culture in the organization. It's extremely, extremely critical that you have the right kind of culture where people, your staff, your employees should feel happy coming to work. Because a happy employee will create a happy customer. Yes, if an employee is not happy, he will never create a happy customer. So create that culture where, for example, if someone has done something good, you compliment him in the presence of multiple people. And if he's done something wrong, then you sort of talk to him privately and tell him that he's done something wrong. So just create that feeling where people like to come to work. Because if they like to come to work, then the benefit that you would get in the long term will be tremendous. So this, I would say, will be the second, creating culture. Yeah. Third, I would say, is innovate. Keep innovating. The world is changing very fast. Today, you see the kind of technology changes that are happening every day. So you have to innovate. What worked yesterday will not work today. What is working today may not work 5 years from now. So create the right kind of innovation, whether it's in terms of products or whatever it is. Fourth, I would say, is also accept failures in life. Everything in life is you're not going to get success all the time. There will be some failure here and there. But you have to have that mindset to be able to accept that failure. And last and most important, I would say, would be to create the right ethics and the right integrity in the organization. You have to win the trust of your customers. Your customers must trust you. And that trust will only come if you practice the highest standards of integrity. So these would be the 5 bits of advice I would give back.
You just enumerated everything HDFC resonates with. Thank you very much for this. Thank you.